Hello everyone, Happy New Year. I hope this particular year brings all the happiness, joy, and health and wealth for all of us. This is the first session that we are having on uh, in the year 2024. So, one particular request, please keep on liking and sharing the sessions. Every single day, we are working hard, we are coming up for you so that you are getting all the content which is required for the examination. And if you find these particular classes helpful, then what you can do is you can share it, you can like it, because that's the source of motivation for all of us. So please go ahead and like this particular session and share it among your peers. Okay, everybody, since now we have entered the new year, but have we entered with the new module yet? No, we are still left with a little part of module B. So let's finish up the module B first, and then that would be followed by C and D later as well. So let's go on and talk about module B further. Today I'm starting with another chapter, another chapter, or you can say another unit, that is cash flow and fund flow. What do you mean by cash flow, and how is it different from fund flow? Because funds and cash, it's all about money now, the money movement. So what's the difference between the two? The difference is cash flow talks only and strictly about movement of money. It doesn't talk about anything else. While fund flow talks about in a broader concept, fund flow is basically something which talks about the movement of funds overall. ठीक है. So movement of funds means if you are supposed to receive money in future from someone, if you're going to pay money to someone in future, that is also covered in this area. So it considers a lot of things which cash flow doesn't take up, right? So technically this particular unit is unit number 16. Out of 35 units, we are almost at 50% of the syllabus right now. Okay, so let's continue further. Now, we were talking about cash flow and fund flow now. Uh, Let me give you a little brief information about cash flow first. Then we'll move on to fund flow as well. This is cash flow and this is fund flow. Cash flow says there are three kind of activities in cash. First is operating, second is investing, third is financing. Operating is when we talk about money. Investing is about when we talk about investing is about operating is about your business actually. Business means if funds are coming in your business, funds are going out of your business, that is operating. Investing is something where we are purchasing or selling any long term asset, because you're investing money in something. Investing money in shares, you're putting money in some machinery, that's investment, right? And then from where are you getting the money? You're getting the money from shareholders, you're getting the money from borrowing, all those things are there. So that is a part of financing. So the loans, borrowings, they're all a part of it. Okay, that's a part of financing. So cash flow can be divided into three parts: operating, investing, and financing activities. Now, this is cash flow. This is divided as per AS 3 and IND AS 7. As per SEBI, that is Securities and Exchange Board of India, there are two methods of cash flow. One is indirect, the second is direct. The difference is in the format. As per SEBI, they say that you should use indirect method only as per Securities and Exchange Board of India. That is why in the examination, the uh, indirect method is more important, though they can also ask you the questions on the basis of identification of activities. If they'll give you a transaction, is it talking about operating, is it talking about investing, or is it talking about financing? That's a part that we'll be doing. Then the part is of fund flow. What do you mean by fund flow? Movement of funds. Okay, this is called movement of funds. What happens in a fund flow then? In terms of fund flow, first and foremost thing is movement of funds. Now we have current asset and non-current asset. We have current liability and non-current liability. Whenever the movement is between two currents or two non-currents. It is not fund flow. When one is a current one, the other one is a non-current one. If you pay any loan with cash or bank balance, this is basically fund flow. If you are using an asset to pay off your current liability, matlab you sold something, some asset, and then you paid your creditor because they were asking for too much money and you didn't have that at that point of time, and then you were like jaldi se de do. That means just get an asset, rid of asset, and we'll be again getting the project, and then we'll get it done. So organization does this when they're in a crunch or something now. So that's why they might use this. Then current asset and non-current asset. Now this is vice versa. That can also be done. And current liability and non-current. This means you cannot have both currents or both non-currents. If it is both current, then it is called working capital, which is current asset minus current liability. Okay? So that is what we call in this era. We have cash flow and we have fund flow. These are two. Okay, I hope now the entire part is visible. So we have two of these things, and the difference between the two lies here. You can see the topics are totally different. Their way of presentation, their way of telling the answer is totally different from the other one, right? So that's the entire concept of cash flow and the concept of fund flow. What next do we have? Let's begin with some reclassification based questions, and then we'll move on to that. In the balance sheet, where is inventory typically classified, everyone? In the balance sheet, where do you put the term inventory? Current liabilities, fixed assets, current assets, or shareholders' equity? When we talk about balance sheet, inventory means the the goods that we are keeping for sale. So when we are keeping something for sale, that is something that we don't want to keep for more than a year, not even 3 months. People just want to sell their goods off as early. They're just entering the warehouse. They're like, just sell it off. They don't want to keep it in the business there. So in this case, what would be the correct answer? The correct answer is going to be current assets. The answer is C. Now, the next point. Where would amortization of patents be reported in the financial statements? Just like depreciation is there, depreciation is in case of tangibles. Amortization is in case of intangibles. Okay, so that includes operating expense, non-operating expense, income in financing activities, or the other comprehensive income. Amortization, that means I'm writing off my goodwill, maybe a patent, copyright, whatever that case would be. Now in this case, patent is amortized. That means an intangible asset is getting lesser. So if its value is declining, it's an expense, right? And that is because we are using the particular patent in business, because we buy the patents or we create the patents because we are doing the business. So in this case, the correct answer is going to be operating expenses, the expenses that we incur because we are running the business. Where would the preliminary expenses be recorded in the company's financial statements? Operating expense, intangible asset, other comprehensive income, or current liabilities? Preliminary expenses are those expenses which are related to the area of before the organization was ready as a company. The expenses that we incur are called preliminary. Preliminary expenses can be specified as earlier they used this is a fictitious asset. Why? Because we have already created the company. Why are we writing those expenses? They say we are just capitalizing it over the period of time. We will use it as an expense. For example, the total preliminary expenses. The expenses to build up the company was total 1 lakh. They said divide it by 5 and give 20,000 per annum. right? This is the amount that you have to give per annum. So overall, 5 years, entire preliminary expenses gone. This is again an expense which we can treat as an intangible asset. Writing off is covered in profit and loss account, and noting of it is done in the balance sheet. Then, what is the main purpose of the cash flow statement? To determine the profit or to assess the liquidity and the cash position of the enterprise, to calculate return on investment or evaluate market trends. Cash flow is something which strictly talks about two things: inflow and outflow of cash. It doesn't talk about anything else. So, this is to assess the liquidity and the cash position. So, it talks about cash inflow or cash outflow because it is obsessed with cash and cash equivalents. What are those? That means cash, bank balance, that is also equal to cash, and then is marketable securities. The securities which we are holding so that we can sell them off. And everyone, the answer is to assess the liquidity and cash position of the enterprise. In the cash flow statement, where do operating activities typically include cash transactions? Purchase of long-term investments, issuance of common stock, day-to-day business operations, payment of long-term debt. Now, in cash flow statement, in terms of operating activities means the activities which you are doing to get money through your business operations. You're trying to get money from your business, so purchase of long-term investments. You don't do it for your business. This is to expand your business. This is not our day-to-day business. So, acha, another point is I just said the word day to day. Issue of common stock, that means issue of shares. So, again, this is not something that I can call here. Payment of long term debt, something again, it is a finance based thing. So, in this case, only C point, that is day to day business operations, is the answer. What does a negative cash flow from operating activities indicate? The company is generating sufficient cash to cover its operating expenses. The company is experiencing a cash deficit from its core business operations. The company is highly profitable. The company has high liquidity. When we talk about the negative cash flow from operating activities, negative cash flow means probably this year we have earned less and then we have paid more. So, how are we managing that? Because I cannot have minus 20 in my pocket. It can be based upon in the beginning of the year I had 10 rupees, and during the year maybe I had an income of 20 rupees, but I saw an expense of 22. So technically I faced a deficit of 2 rupees. For that, how did I cover it up? I used my previous cash. That means by the end of the year I was left with rupees 8 only. Okay? So in this case, we are having a deficit, a negative income. That is what they are saying. Negative cash flow can be there, but negative cash balance is never there. You can never have minus 20 rupees in your pocket, minus 40. This doesn't happen. The company in this case is experiencing a cash deficit from its core business operations. This is from your business operations only, right? That is what we determined in this area. What is the primary objective of cash flow statement? The primary objective of cash flow is to find out the movement of cash. There can be nothing else. Determining profit, P&L is made for that. Evaluating market trends, again, this is not our problem. Analyzing balance sheet changes, we have comparative balance sheet statements for that. The comparative analysis is done through tools which have been defined for financial analysis. So in this case, the correct answer is going to be assessing liquidity and cash position. So in this case, you are doing it to see the movement of, okay, Then which category of activities includes the acquisition and disposal of long-term assets in cash flow statements: operating, investing, financing, non-cash. Which category of activities include acquisition? You are purchasing and selling a long-term asset. Operating says, no, I don't deal with it. This is not a non-cash as well, because you are selling and getting the payment for that now. Financing is to get loans or managing the loans. So in this case, the answer is investing activities. How are cash equivalents defined in the context of cash flow statement? Long-term investment, then we have highly liquid investment with insignificant risk of value changes, marketable securities or fixed assets. Cash equivalent, uh, cash equivalent is basically something which is just like cash, as liquid as it, and more stability is there. For example, marketable securities are those securities where the price of that particular security doesn't change that doesn't change frequently. That's what they call it. So in this case, the securities are basically highly liquid investments with insignificant risk of value changes. There won't be major value changes in the short term. Long term, though we don't know, but in the short term, yeah, there won't be much. Then, what activities fall under the category of financing activities in the cash flow statement? Revenue producing activities, changes in the size and composition of contributed equity and borrowings, acquisition of long term assets, or day to day business operations. What activities fall under the category of financing activities? Financing means through which you are arranging the funds for the company, because that's what we talk about, be it equity, be it debt, be it the owners of the organization or the lenders which have given the money. So answer is B, the changes in the size and the composition contributed by equity and borrowings. Acha everyone, I hope you have already reviewed one particular thing. At this point of time, our the biggest sale for the season is here, and today is the last day for it, right? So this means if you are preparing for this examination, then hurry up, enroll right away, because 85% discount is available only till today. It is ending today. Last day of sale is here. So please go ahead and enroll yourself, get 85% discount and double validity on our Mahapacks as well. On the normal courses, you will find 85% discount, and in on our Mahapacks, you will find 85% discount plus double validity. So please enroll yourself. Use the code Y541. You can see it at the top. You can use the specific code and you can get yourself enrolled in our courses as early as possible, right? Okay. Why do cash flows exclude movements between items that constitute cash or cash equivalents? To simplify financial statements, to focus on cash management, to enhance investing activities, or to reduce operating activities. How can, why do cash flows exclude movements? The cash flows really leaves a few things which between the constitutes. Everyone, it's about the form. If I had water in one bottle and I move it to another, that's not the water is increasing or decreasing, it's just a movement. So when you are moving the money from bank to cash, cash to bank, you have the same amount in your pocket. The variation will come when you will get bank interest. Till then, if you're moving the money here and there, that just doesn't make a difference, doesn't it? So in this case, the answer is to focus on cash management. Their focus is just to find out what is the amount of cash that we are carrying right now, and if we can reconcile it easily or not, right? Because they had to give hard proofs to the government. In a single transaction involving repayment, how might the interest and loan element be classified? Interest and loan element means if we have taken the loan, then we are supposed to return it. है ना? That is, it is both operating activities, interest as investing, loan as financing, then interest as financing, loan as investing, and both are financing activities. When we take a loan or we repay a loan, technically in this case, interest as financing. If you have taken a particular loan for the business growth, in this case you are making the payment, and if it is related to the area of financing, then whatever interest you are also paying, that is also the portion of the business there. So in this case, interest with to the interest that you are paying to acquire a specific area, specifically for your business, then the loan that you would have paid, that is something which is a part of this. For example, we are making the payment now. We have taken a loan, that is also financing. The loan has to be financing, and interest is something that we'll be taking up and canceling it up with the area of operating. In this case, the loan repayment is financing activity, and the interest is also a part of the financing activity. And in the operating expenses area, na, you will include this as a finance expense. Okay, that is what we'll be talking about. So technically, this answer that interest is financing, it is as financing, and there is nothing else in it, right? So that's it for the day, everyone. I hope this session was helpful for you. If you haven't enrolled yourself yet, then please go ahead and enroll yourself as early as possible. Go on to our website. This is what you can do. Go on to our website, that is www.adda247.com. Go on to the area of JIB and CIB. The Mahapacks are here. You can actually go and enroll yourself in both JIB and CIB. You can also enroll yourself in JIB Mahapack, which is all the JIB, matlab English medium, bilingual, the ebooks, test series, then recorded classes, previous and the current as well as upcoming future. And you are having validity of a big amount. Your validity is for 1 year there, right? 6 months you buy, and then 6 months is available for free. And see, it is available for a particular amount of 5332 only. For 1 year you just have to pay 5300 something. So please go ahead and check it out on the website, on our app, because today is the last day. The sale is ending today at um in the evening only. We were supposed to close it up, so that means you just have this to today's night, and then it would be over. So please enroll yourself in time, because 85% discount will not come again that easily, right? So go ahead and prepare properly and live well. Thank you, everyone, and happy new year again.